Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Monday. It is Super Bowl week. It is the Waste Management, a.k.a. the Phoenix Open as well. The biggest party in golf happening right here in the Valley of the Sun. For all of you tourists out here that fly in for the event, welcome. It's going to get rainy here most of the week, but hopefully on the weekend it'll be good. The Super Bowl, a repeat. The Niners and Chiefs, they locked horns a few years back. Kind of, I guess, the Chiefs, kind of the new Patriots, and the Niners, right? They're right there too. I think it's their second Super Bowl in 5 years, and this will mark the end of the official holiday season. I know my Uncle Eric a long time ago said, yeah, the holidays aren't over until the Super Bowl and the Waste Management Open. So that is going on this week. And I'll say this, if you're getting ready to have a Super Bowl party, yeah, it's going to cost a lot more, despite what Jay Powell has to say. Heck, he was even on 60 Minutes to try to tell us that inflation's getting better, but we all know the truth. 800-951-0592. That is our toll-free number. AllAmericanGold.com is the website. The Dow down big today. Right now, approaching 500 points to the downside. Well, let's call it 400. The S&P's down 30. The NASDAQ down 115 as once again interest rates rising, the debt levels rising. The Senate wants to spend another $118 billion that we don't have, but we've already said 2024, the year of chaos. I think we're just this is probably going to be the norm. Really big swings day to day, week to week, month to month, depending on what the news is of the day. And we've talked about the need. You got to be diversified. You gotta take more protection than you have in a long time. Talking about one of the things we'll talk about, Jay Powell talking about the banks in '08 and how's that going to look like. But it's a reason why we bring Joey on every Monday, because listen, when you've got the old 401ks, the IRAs, you need to have somebody in your corner that isn't a bank. He's from Northwestern Mutual. They are not a bank. They're not. Heck, they don't even play the stock market game. They're like, nah, we don't need you telling us what to do. They're the highest rated place out there. You can get up to $500,000 of insured money. Go to the banks. It's only $250,000, $500,000, and then the other thing is, like a lot of things, think about how the stock market's evolved, and they've got ETFs now and things of that nature. Insurance is another way where a lot of people are locking in some really good returns year after year without the risk, and that's why we have Joey with us. Joey, again, very volatile week, obviously very volatile day to day. Jay Powell doing a lot of talking. The need for diversity probably as great as it's been going back to '08.
Yeah, it's been certainly crazy times, and diversification throughout history has just been winning year over year, and it's super important with an election year coming up and all these crazy things going on in our world today, that we are being more careful and conservative with the way we're saving and investing our dollars. And our clients appreciate talking and working with us because we're looking at every avenue possible to make sure that when these bad times come, the market is going up and it's going down, that they always have a place where they can pull some money from, whether it's through an insurance policy or through their investment accounts or a money market account. But we just want to make sure that at the end of the day, your money is working harder than you and that it's safe. The biggest thing I hear, especially listeners on KHNC, is really just making sure we're preserving their wealth. and we're getting them some growth from year to year. But making sure that these tax bombs they're having in retirement is not going to be a problem, and that while they are saving and preserving their wealth, they're doing it in a tax-efficient manner. And to those of you who are entering retirement or maybe even in retirement, I think it'd be a great time for us to have a conversation just to see if there's any way we can make things more efficient, but more importantly, get a second eyes, second review on your investment account to make sure those are invested correctly and you're not taking on too much risk year over year.
Would you say that's kind of the two big things that you're noticing, especially those that are getting closer to retirement, or like you said, maybe they've just entered retirement recently, is those 401ks, those IRAs, they worked really hard to put themselves in a really good position. And now that they're almost to the finish line, that they're really not set up very well from either a tax perspective or they're set up to be that they're actually being overly aggressive and really setting themselves up for a lot of risk that they don't need to take.
Yeah, ultimately I will tell you that most of the clients that we talk to that are in their late 50s, late 60s, and they're entering retirement, they really haven't looked at these accounts. And I could hear the commercial coming on, so I'll touch on that after the break.
Right, we'll be right back with Joey. Stay with us. Patriot Radio News Hour on this Monday. 9510592. Joe and Jason here on this Monday. We got Joey with us. His number 602-909-9048. And right before the break, we were talking about, a certain age group. Hey, you're in your 50s, maybe you're in your 60s, you're close to retiring, or maybe you've just recently retired, and the two things that Joey's been pointing out, the two biggest areas are not being properly set up for taxes, right? So you that 401k that you did such a great job saving up for, you're giving too much of that to Uncle Sam, and then on the second side of it, Joey, it's the amount of risk that people are taking. A lot of people, hey, you've gotten to where you're going to need to be. As long as you play your cards right, you're going to be just fine. And they're overexposed. They're carrying way too much risk, which all of a sudden, especially if you've retired one bad year in the market, and next thing you know, they went from, hey, you're in good shape to, hey, you know what? You've got a problem now. You're going to be short.
Yeah, those are the two biggest problems. One, usually being with our clients entering retirement, is their investments are just taking on way too much risk, and they're being way too aggressive. And, you've done a great job of saving. You have enough money built up in there to last you for your retirement. And you're one bad year and a couple of bad decisions away from really shooting yourself in the foot. And then the other side is the taxation of these dollars when we do decide to pull from them and live off what we've saved. And the biggest thing is required minimum distributions, right? You reach the age of 72, the government is going to make you withdraw from those funds. What are some ways, if we don't need the money today, to save that money later on more tax efficiently? So we're doing tax loss harvesting every year. We're converting traditional dollars to tax-free Roth dollars every year, and we're doing this all inside our clients' income tax brackets to make sure we're not jumping up from 14% to 22%. And by doing this and just restructuring things around and not even saving more money, just maneuvering them in different spots, our clients year over year are saving about 3% on the taxation of these dollars after getting 6% return year to date on their investments, and they love that. As they're entering retirement, their money's going up. We're at least pacing with inflation and beating it, but more importantly, we're turning those taxable dollars into tax-free dollars over time. Yeah,
and that's really, when you think about, hey, we're we're getting you a good rate of return, but on top of it, hey, we're going to save you another 3% on the tax side, and 3%. You're like, well, that's a good chunk of money, but some people might say, well, it's not a ton of money, but it's 3%. This year, 3% next year, 3% the year after that. It's a ton of money over the course of 10, 15, 20 years.
Yeah, it is a lot of money, and that certainly does add up. And the nice thing is with our clients is they know that they get to call us whenever they want. We are always available. We're always getting back the same day just to make sure we're on top of things. But most importantly, you have someone you can trust in your corner. As these laws change, the rules change, the contribution limits to different vehicles change, we're constantly up to date on that and making sure you're doing everything correctly so the IRS and Uncle Sam aren't going to be knocking on your door. So to everyone out there who's planning for retirement, you're in retirement, you've done a great job of saving, but you just don't have a plan to distribute your wealth, it's probably the hardest part of our financial planning is how do we spend down everything we worked for our entire life to build up. And if we haven't had a conversation yet or you've been wanting to reach out, you can reach me at my personal cell, which is 602-909-9048. Again, that is 602-909-9048. If I miss your call, just leave me a voicemail or shoot me a text, and I'll get back to you as soon as I can. But as always, it's a pleasure to come on here every Monday, and I hope everyone has a great week and enjoys the Super Bowl.
There you have it. That's Joey. He'll be back with us next week. But make sure, listen, if you haven't done it yet, what are you waiting for? We had Jay Powell. Jason, he was on 60 Minutes yesterday and just really reiterating kind of what he said in his press conference after the interest rate hike. Well, it wasn't a hike. The leaving rates unchanged, but kind of saying, hey, we're still waiting. We want to make sure that we have inflation really under control before we commit to rate cuts, but yet saying, the same thing, which is rate cuts are going to happen at some point this year. They're just not going to happen in March. But he actually said a lot more than that. Now, this is what, Wall Street is going to focus in on is they're like, okay, well, if it's not going to be in March, well, is it going to be in May, or is it going to be maybe a little after that? But what's really interesting is they finally got down to talking about the banks. After they were talking about rate cuts and how many cuts and when they're going to begin and all of those things, they got into talking about what's happening in the banks, and they talked about what was going on with the losses in commercial real estate. But it was interesting that when he was talking about banks, he said that he doesn't think that this is going to look like 2008. I don't think there's a risk of a repeat of 2008. We need to be careful about making proclamations and proclamations about this, particularly in the future. Things have surprised us a lot in talking about the banks. But they think, and this is their quote, Jason, I think it's a manageable problem. I think what Jay Powell just pretty much said is, hey, we're going to have more bank failures. And we're hoping that it isn't the magnitude of 2008. In our base scenario, it's not that. But we've been surprised before.
Yeah, I remember the last time, I thought it was just about 3 years ago, but I guess it was almost 4 years ago, the last time I saw a Fed guy on 60 Minutes.
Right.
And it ended up being March 22nd, 2020, right at the beginning of coronavirus, and Neil Kashkari came on and started talking about we can print all the money we want. And boy, did they. So,
did.
I'm starting to think whatever the Fed chief Jerome Powell said, they're probably going to do exactly what he's saying. And to what length, though, is going to be the problem. How much damage is what he's saying going to do? Because, boy, I mean, I remember that Neil Kashkari said, wow, this guy just said he's going to print money like crazy. And, man, all everybody was worried about was COVID, and they did exactly as they were told. Almost makes you think the end of March thing is coming, Joe, and whatever emergency gets raised, everyone's going to forget about this appearance on 60 Minutes, where they can come back and say, well, we told you we were going to do this.
March is going to be interesting. There are going to be banks that have to be closed, Jay Powell said. They're going to be merged out of existence because of this. There'll be smaller banks, I suspect, for the most part. You know, there are losses. It's a secular change in the use of downtown real estate, and the losses and the results will be losses for the owners and for the lenders. But again, maintaining it feels like, don't worry, it's going to be a manageable problem, and this has always been the issue. It's always manageable right up until it isn't manageable, right, Jason?
He's saying banks are going to be closing. He's saying it out loud.
Out loud.
That's the same thing as in March. It's March 22. The country shut down on March 13th, essentially. The presidential emergency was March 13th on Friday, and then the close down of the country was that Monday. Was the 16th, right? And then Neil Kashkari comes in a week. It's like, well, I'm not sure how the economy is going to fare in this situation, but we'll print money if we have to. And yeah, the economy crashed. It crashed and burned. Remember, Joe? It was dramatic how bad it was. Down days of 2,500 points, up days of 1,000, then back down another 15. It was dramatic, but it was so fast, and everybody was so distracted with the emergency that they didn't see. You know, how a lot of really rich people enriched themselves. Small businesses were being smashed and destroyed. And then they just printed like crazy to get us to where we are today, 2024. They bought us, 4 years, Joe? 4 years.
Yeah, and you got to remember, we're living with the mistakes that the Federal Reserve has made. The reason that these losses are so bad. I mean, when's the last time you heard the head of the Federal Reserve on mainstream, and forget about being on the stock channel, just I don't care what type of TV, talking about, hey, there's going to be more bank closures, and almost trying to make it sound like, well, you know, it's no big deal. You know, yeah, we're gonna have to close banks, and we're gonna have to merge banks out of existence. But you know, hey, don't worry, because they'll just be small ones. I think, maybe, right? Hopefully, fingers crossed. It really just gives you an idea of how bad things really are, and how they've done such a good job of making you believe that it's still okay, right? Like somehow, well, don't be that worried, because look at he sounds like they're going to be able to keep it manageable, and that was kind of the big word that they used. Oh well, it's going to be a manageable problem, right? It really. Think about. Let me ask you, how manageable was it really? Silicon Valley Bank. It wasn't a big. Listen, I'll be honest. Had any of you, now maybe there's a couple, had any of you ever heard of that bank before? No. This wasn't a bank people heard of. Yeah, maybe, the billionaires, some rich people on Wall Street knew about it. Maybe the big tech companies in California kind of knew about this bank. No one knew about this bank. Signature Bank? Everyone know that bank? No. These weren't huge banks. And now already the bank that took over Signature's deposit, now they've got a problem, right? This bank's got a problem. And the head of the Fed is going out on TV. I don't know what people hear. I think this is a case. People hear what they want to hear. And, of course, the market's all because they know stocks are way overpriced if rates are going to stay at this level and talking about, inflation, this and that. Believe me when I tell you the problem is very simple. We've got a debt problem, and it's everywhere, and it is so poorly priced because of what the central bank did, taking interest rates to zero and leaving them there for over 15 years has created a problem that, Jason, and it's on all the bank's balance sheets, and you started to see the size of these write-downs. This isn't, hey, we took a 5% loss, or we took a 10% loss. No, these banks are taking 50 and 60% losses. I mean, again, I think people just want to hear what they want to hear. And the realities are, as Jason said, the Fed has done, give them credit. They've been telling you what's going to happen. And he's telling you banks are going down. $800-951-0592. More banks now raising their gold and silver forecast for 2024. UBS saying gold is going to be pushed higher again this year. Weaker dollar as when the Fed starts to lower rates. Saying the metal is going to be up at least $2,200 by the end of the year. I'm talking about, hey, 10%. I think that's probably very conservative when it comes to that. On the other side of things, on silver, they expect, like we do, silver is going to outperform, we believe, this year. Let's face it, silver's been trailing gold lately and over the last several years. And silver's had a couple of good years. I mean, it wasn't that long ago. Silver was only $18. So it's not like it's been horrible, but we expect a bigger move in silver. And I always use the analogy that they're brothers. Gold's the older brother, silver's the younger brother. UBS calls silver the poorer cousin. Either way, same thing. These guys are family. They run together. Silver, right, like a little brother would, right? You got to be home for dinner at 6, and big brother, you're at the park and you're playing, and big brother's like, hey, it's time to go, little brother. And little brother's like, no, I'm still on the swings. I'm still playing around. And so big brother's like, hey, whatever, you're going to get in trouble when we get home. And gold takes off. Big brother took off. Well, you know how it is. Little brother's going to press his luck for a little bit. And just as big brother's getting out of sight, what happens, right? He takes off running. And I think that's exactly what I anticipate is going to happen in silver this year, Jason. We could definitely see, listen, we're going to get, by all accounts, a really good return in the gold markets, very similar to last year's returns. But in the silver side, we can see even bigger returns and potentially much bigger returns. I wouldn't be surprised, silver having a 20, 30, heck, even, the possibilities are there, especially with the shortages in silver now, to see, a return of 50%. Silver's $22, 50% return puts it at 33. That's not outrageous.
No, silver can really move and move fast. I mean, so can gold, but I mean, gold is very dependable. It moves when it's supposed to move. But you're right, Joe. There's been times when silver's been overbought and it goes way too high, and then there's other times where silver just kind of lags, and it seems like it's being pushed down on purpose. But It's a physical metal, and the physical markets can move the paper markets if the buying starts to hit hard enough. I mean, 1980 and 2011, silver was moving, man. It was really moving, and it went a little too hot. But right now is the time to buy it before it gets really hot. Get it while it's lagging, like Joe's saying. It's lagging. It's a great time to buy it, and I think in today's instant gratification, gold and silver is just really hard for people to get to understand when they first get into it, because it looks like a turtle. But if you just, you put the turtle out in the yard and go to sleep, take a nap for a couple hours, it'll make it to the other side of the yard just fine, And what were you doing? You got to take a nap and relax. Good luck watching the markets and all these other asset classes you can get involved in, Joe, are massive ups and downs, and you can get wiped out because some guy was crooked in the CEO position of what ABC company or whatever. But a CEO can't go out there and bring more gold out of the ground or go hide it. It's just there, right, Joe? It's not as controllable as these other things. It's not as corrupt. So silver can roll. It can roll, Joe. It can roll, and it can roll really fast for sure.
Well, the one thing that and I think the analysts, when they're talking about it, the one thing that people need to realize is silver went through a number of years where they were producing more than what was needed, and not a lot more, but they were producing more silver than needed, and for almost 10 years, from about 2013 to 2021, and they ran surpluses. In other words, silver stockpiles, above ground silver stockpiles, were growing. That all changed. 2022. There ended up being a pretty healthy shortage that took about, 40% of that excess storage that was sitting above ground. 2023, it took the rest. It's all gone now. There isn't that big overhang when it comes to supply. And now this year, Jason, they're forecasting another huge shortage. And so when we're looking at why is silver potentially going to make this big charge? Because both the metals, because of the situation that we're in, and look at Jay Powell. Hey, we're going to have bank closures. We're going to have to merge banks out of existence. We're going to cut rates this year, because that's what he said. Now, he also said, hey, it's not going to be March, but we're going to be cutting rates this year, which tells you they expect more slowdown in the economy. The dollar's going to be weaker. You're going to naturally get this gold and silver move. And Jason, when that move comes, people are going to start to realize this. People, they don't pay attention that much. Oh, wait a minute. Man, there really isn't that much silver out there. And then all of a sudden, that's when you wake up and silver's up $2 in a day. It's up $5 in a week. Right? I mean, think about what happened. Remember what happened to nickel and things like that? There's that potential there to have really big moves because, Jason, they just don't have the supply that they normally have, especially in the silver markets. People are used to being able, hey, there's plenty of silver out there. That is not the case this year.
Yeah, I always like the guys that have been buying for a couple of decades, buying gold and silver. I bought $20 gold pieces. They were $300, $500. I hear the guys, I bought silver eagles for $3 and $4 each. Yeah, I was buying rolls at $80. Guys that bought rolls of silver eagles for $80 each, and now we've bounced around $600 this year, and last year, $600 for roll silver eagles. I'm talking not 1900s, which you never started to talk a long time ago. That was the 2000s, right, Joe? You could buy this stuff so much cheaper, and these moves are fairly dramatic if you look at them. They move the price up fairly high, very quick. So 800-951-0592. Time to stock up, right, Joe?
Absolutely. We're going to help you do it when we return. (800-951-0592). Joe and Jason, Patriot Radio News Hour here on this Monday. Today, Silver Eagles. You know, we had them on sale last week at $5.95. Got silver down today. So guess what? Even more affordable. $590 to the roll. If you buy a case, the Green Monster box of 500, save another $5 a roll. $14,500 on cases of U.S. Silver Eagles. For those of you looking at, hey, you know what? That's a little rich for my blood, or I want even more and better barterable material. Rolls of silver dimes, $95. Rolls of silver quarters, $190. And then my favorite, rolls of silver half dollars at $200. So a dime roll, that's $5 face value. That's 50 silver dimes for below $100 at only $95. Rolls of silver quarters, that's a $10 face value roll. So that's 40 silver quarters at $190. And then the half dollars, again, another $10 face value roll. That's 20 half dollars for $200. The rolls of Silver Eagles, that's a roll of 20 1-ounce silver coins, $590. And then that case of Silver Eagles, Jason, that's 500 1-ounce Silver Eagles, 25 rolls of 20. They come in a what we call the Green Monster box. It's like a shoebox that weighs 42 pounds. That's a case of Silver Eagles, $14,500. And then on the gold side, I've got I don't even have 100 of them. I got less than 100 $20 gold pieces. They're going to be Liberties or Saints right now, and we're going to heat those up. $2,200 on a $20 gold piece at 800-951-0592. Jason, we got gold down $15 at 2020. Silver's down about 40 cents right now. And again, the Dow, having another, a down day on the Jay Powell comments, down almost 400 points because rate cuts are going to be a little later than they were hoping for, which means more problems for the banks.
That's correct. I was not paying attention this weekend when Jerome Powell was coming on 60 Minutes. I don't do a lot of network television, so it's hard to know when these appearances are happening. But I would say very ominous, Joe, to have him on 60 Minutes. It's just the reason you brought it up. The first thing that came to my mind is I remember when that other Fed guy came on. And all hell broke loose, and everybody was freaked out with COVID. And this guy is saying, well, we'll give out money here. We'll give out money there. Small businesses, we'll give them money. Anybody that wants to get through the shutdown, or he's like, I don't know how bad it's going to be, but if we're going to get through it, the Fed will do what it has to do. He was, the Neil Kashkari interview was very, I have the power kind of feel to that. Jerome Powell doesn't do the He-Man thing, Joe. He doesn't act like he's the all powerful. He tries to be kind of like your grandpa, I think. He just wants to keep you calm, tell you everything's going to be all right, right? As if Grandpa lost his job and Dad lost his job and the whole family's going to lose a house, Grandpa's not going to come to you. It's like, oh, yeah, we're going to lose a house and we're going to be on the street and we're starving to death. But he's saying it in a really nice way. But Neil Kashkari was like, we'll do whatever we want.
Yeah, and again, we're going to watch the data. I didn't even get into the jobs data. Boy, we learned a lot after the fact. This 353,000 jobs created. The actual unadjusted number was down 3 million, which makes sense. I think there was a huge over adjustments, what they call the seasonal adjustment, because we knew outside of Amazon, everybody else hired less. So that number may not have been nearly as good as what we were led to believe, but we'll wait and see. But something else to be aware of. For the first time ever, we're going to have to sell more than $10 trillion in debt in 2024. Think about that, the amount of debt rolling over. Almost a third of the debt needs to be rolled over this year. $8.9 trillion of old debt is coming due. So, whether that's a 3-month, 6-month, 2-year, 5-year, 7-year, 10-year, 20-year, 30-year, all of these things that we already sold once come due. And here's the problem. Most of that is coming due when the rates were really low. Right? Think about all the stuff under 10 years old. They bought it for nothing. So it's going to be a huge increase in borrowing costs for us. Then you have to factor in the debt. Right now, they're hoping it's only another $2 trillion. Right? That means we're got to roll over $11 trillion. Right? Somewhere between, let's say, $11 and $12 trillion needs to be re-loaned out. So we got to find, somebody willing to buy $12 trillion of U.S. debt in a single year. And here's the problem. It doesn't get any better from here on out, right? The debt just keeps getting bigger and bigger and bigger. Yeah, you kind of see the problems that are facing Jay Powell. They're facing Grandpa. He's telling it to you in a really nice way, though. Does it make it any better? Get that silver put away. 800-951-0592. Final segment coming up. $800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Monday. And Jason, we're watching all of these things play out. We're seeing, all the dangers of the amount of debt we're in. And then over the weekend, the Senate, hey, we want to spend another $118 billion because we gotta give money to Israel. We've got to give money. We're going to give some money to the border. Another $60 billion to Ukraine. And again, I think there's debt on arrival in the House. You know what was so funny? Their big move was going to be, if you will just give us money we can't afford, so we can fund all these wars. We'll give you some money for the border, and we promise, pinky swear promise, that we're only going to let in 1.5 million illegals every year instead of the close to 3 million a year that have been coming across right now. So, sounds like a great deal to me.
So interesting how they actually have a number. They have a number picked out.
Listen, I'm sure they're going to get rid of the Border Patrol. We're going to have the bouncers at the bars. They're going to now be at the border. They'll sit on that high stool and they'll check IDs, and then they'll have that little counter in their hand, right? When they get to 5,000 a day, when they get to that's 5,000. Yep, so you got to hold it right there. They'll get the velvet rope out and say, nope, you've got to wait. Someone's either got to leave or you got to wait till the next day before you can come in.
I wish the media would ask the question. These are simple questions. I mean, obviously they choose. I guess it seems to me they choose guys that don't ask good questions. But if I were in the press, I'd be like, why is it 1.5 million? Why that number? What about 1.2 million? or 1.75 million. How did you come up with that one? Try to get them to explain how they came to that number. Why isn't it 0.9 million? Why isn't it 800,000? Right? But they got that number, right, Joe? It's like does it make them sound smart that they have a number?
I have a feeling that, and you've talked about this, that we're not having enough kids. Is that
right.
what they think the replacement number is? Do they think
right.
that's right? That, hey, you know what? We're 1.5 million babies a year short, and so we need to have this many just so we can say that GDP went up a little bit. I don't know.
Right. In the world, about 150,000 people die every day. That's a kind of an average number. So, of course, a lot of those are going to be retired and elderly, but some of those we've seen in the news, there's people of all ages dying, and those people have to be replaced. And if you're not replacing them in the natural way, then I guess illegal immigration, not natural immigration, illegal immigration to fill the non-natural replacement of workers, I guess, Joe. Because I know that people think about all kinds of things that's going on, but to have a system for those guys in the bank, those bankers, and those guys in tall towers, they have to have people doing the jobs. It's no fun ruling the world if you can't have someone running it for you. Yeah, you got to have someone there, right?
Amen to that. 800-951-0592. Put that gold and silver away. Jason and I, we're coming right back with the Half Empty Cup.